Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and in this series, I show that anyone can create a growing source of completely passive income. If this is the first time you're even hearing of this series and you want to know what it's all about, I'm going to link episode 1 above my head so you can go back and watch that and get an understanding of what I'm trying to accomplish with this series. That first episode is going to explain all things such as why I picked the stocks I picked, how much and how often I'm going to be investing, and the overall goals of this portfolio. Once you're caught up there, feel free to watch the other episodes in order so you can see the natural progression of this portfolio, or you can just come back to this episode to see where we're currently at. With that being said, if you're already caught up and you're here for your bi-weekly update, let's get to it. In today's video, we're going to be going over where we left off at the end of last episode. Then I'm going to show you the buys completed on March 21st of 2025 in this account, which will feed into the changes to the cost basis of these positions and where the portfolio currently sits after 62 weeks invested. After that, we'll get to see which holdings are the best and worst performers in the portfolio, a season by season breakdown of the progress since we're over 1 year invested, and a chart to show if we're trending in the right direction or not. And to close out the episode, we'll dive into the super juicy stuff like who paid me since last episode, how much they paid me, how we're looking in 2025 income, see when we're expecting a bonus investment into this portfolio thanks to that passive income, and what cash is headed our way in future episodes. Now, since it's been 2 weeks since the last update, let me quickly remind you where we left off. So at the conclusion of last episode, we had a goal of $155 per holding. The account balance was sitting at $1,861.86, and this portfolio was in the red, down $16.56 or 0.89%. Now, let's go ahead and check out the buys just completed in this portfolio with this right here. Here you can see both the $60 auto deposit into the account as well as the $5 invested into each position for this episode. I do have a chart that helps me keep this evened out, which basically just tells me if any position is more than $1 off where it's supposed to be, but this week I slacked and did not even it out, so that's unfortunate. Fidelity invests random amounts under the $5 I tell it to invest, which is how we get uneven in the first place, but since they require a minimum investment of $1, I need a chart like this to alert me when I'm able to add to these underweighted holdings, but that's only if I actually do it. So since I just did new buys in this account, let's go ahead and take a peek at the cost basis of these positions and see which one had the biggest movement in either direction with this right here. With each passing investment into these stocks, the cost basis is likely to fluctuate based on where the stock is currently sitting in price. As a long-term investor, this doesn't matter too much to me on an episode by episode basis, but I still like to track it because I'm weird like that. With that being said, I'm not going to take the time to read all of these, but I will outline the biggest changes since last episode. The biggest decrease, the green fields, since last episode goes to DDS, which is Dillard's, which went from $417.76 per share to $415.49 per share, while the biggest increase, the red fields, since last episode goes to MA or MasterCard, which went from $482.75 per share to $484.16 per share. Overall, the market pullback is still present for all of us and easily visible in this portfolio, which does mean those positions went down, but it also means I was able to scoop up more shares of these companies that I was going to buy anyway at cheaper prices, so you like to see that. With that being said, let's go ahead and zoom out a little bit and see where this portfolio is currently sitting with this right here. So right here is the up-to-date information on the portfolio to reflect our most recent buys completed on Friday, March 21st, 2025, after 62 weeks invested. With this episode, we want each of the 12 positions to be as close to that $160 mark as possible, and with that being said, we have a new account balance of $1,894.33. Now, let me add another screenshot right here with a little bit more information, which will feed into what we'll be talking about next. So this is pretty much the same screenshot we were just looking at, but it has the gain and loss information here at the end. I'm not going to read all this information to you guys, so if there's anything you did want to dive into more, feel free to pause the video here if you need more time to do that. The things I did want to outline here are the best performing position in this portfolio, which is AVGO or Broadcom, which is up $33.64 or 21.11%. The worst performing position, which is getting some competition now, still goes to HUM or Humana, that's down $24.67 or 15.53%, and that overall this portfolio has continued to fall and is now down by $44.36 or 2.32% as the rough weeks in the market continue. Next, let's go ahead and add this portfolio performance to the season chart before checking out the performance trends to see if Despite this recent downtrend, we are still headed in the right direction long term. So on this chart, you'll basically see where the portfolio ended at the end of the first year invested, aka season 1, and where it currently sits, aka season 2. As I said last episode, looking at this chart over the very short term won't be as useful as I see it being when this portfolio is many years old, but it'll still be nice to have and build on between now and then. Once again, this suggestion was made by one of my subs on another video in this series, so if you also have any ideas to make this series better, just let me know down below in the comments. As I mentioned a little bit ago, I like to think of this chart that you see right now as the summary chart and this next chart as the trending chart. So let's go ahead and check that one out right here to see if we're trending in the right direction. As I said in last episode, and it rings even more true in this episode, adding something as simple as a trend line can be vital to the success of a long-term investor when times get rough. For the past 4 episodes or 8 weeks, this portfolio has been in a free fall, as with a large part of the market. Since the goal of most portfolios is to make and not lose money, that can be really discouraging to see it moving in the wrong direction. But with this simple chart, I can see that despite this recent and pretty massive dip, I am still overall headed in the right direction, and that's what you want to see, and more importantly, focus on in times like this. As you already saw and should probably know, the recent dips in these positions isn't stopping me from adding to the holdings and lowering my cost basis, so when the market does come back up, whenever that might be, we'll be sitting pretty. Now, to close out the episode, let's finally get to some good news by first seeing who paid me since last episode with this right here. So last episode, we kicked off March with our first dividend, and this episode features 2 more passive income payments, so let's dive in. On March 13th, I received a massive 6 cents from KNSL, which looking here at this chart, you can see that this isn't a big payer, but it is growing over time, even if it's slowly. This time last year, KNSL paid me a whole penny, then that bumped up to 2 pennies, followed by 3 pennies, and then 4 pennies, and just when you think we're going to get 5 whole pennies or even a nickel, they decided to throw us both and give us a nickel and a penny for this payment. In total, KNSL has now paid me 16 cents, which is 0.86% of the total money received in this portfolio. Then, less than 1 week later, on March 19th, ODFL joined in on the fun and sent me 21 cents. Again, looking at this chart, you can see the growth of this payment over time as well. First, it was 2 cents, then 7 cents, then 11 cents, followed by 16 cents before getting the 21 cents from this most recent payment. In total, ODFL has now paid me 57 cents, which amounts to 3.05% of the total money received in this portfolio. With that being said, let's go ahead and add these 2 payments to March and see where we are with this right here. So with those 2 dividend payments added in, that puts our March total so far at 64 cents, which is 540% higher than the same time last year. If you take a sneak peek at where we sit as we close in on the end of Q1, we are currently at $11.45, which, not including the rest of the money coming this month, already puts us 6,261.1% higher than Q1 of 2024. Down here at the bottom, we compare this year so far to the prior year. At the conclusion of the 3rd week of March in 2025, we are already up to that $11.45 total, which by itself is already 58.1% higher than all of 2024, so I'm excited to see where 2025's total ends up. Now, how I have this portfolio set up, I'll eventually be able to make a bonus investment into these stocks, and we can check out the progress towards that with this chart right here. Once again, this idea came from a simple comment down below, and now we have this beautiful chart to look at and talk about. This chart simply shows how long it would take at the current pace to add a bonus investment into this account. For those who might be late to the party and have no clue what would cause me to do a bonus investment, let me explain. Since I don't drip into this account to help me keep it as balanced as I can, all of the dividends and interest received are just added to the cash balance of the account. Once that amount hits $60, aka the bi-weekly amount I invest into this account, I will do a bonus investment of $5 into each stock. Last episode, I showed you it was projecting to take me until December 11th of 2026 to hit that $60 mark at the current pace, but also showed you that 42 days had been knocked off in just one episode. Well, this episode was a little bit different because instead of knocking off 42 days, we were able to knock off 56 days, bringing that bonus investment date now to October 16th of 2026. As I said 2 weeks ago, I wanted to make a chart to show that progress, and while this is about as far from pretty as October of 2026 is away, this helps capture the excitement and progress made so far. Now to close out the video, let's go ahead and see what else is coming down the pipeline for March with this right here. So here you can see what is left for the rest of the month of March and thus closing out Q1. You can see that we're actually not expecting anything next week other than a passing ex-dividend date, but we are expecting one more dividend payment from AVGO on the 31st. Also, not pictured on here is the interest payment somewhere around 10 cents that'll also be paid out on the 31st, which will boost these March numbers before turning to April. Speaking of April, the next episode you'll see will be on April 7th, which means we'll also be expecting another dividend from PHM on April 2nd. With that being said, be sure to come back in 2 weeks as we get another update to the portfolio, track that bonus investment progress, and close out March and Q1 of 2025. But that's going to wrap it up for this bi-weekly update to the Anyone Can Invest portfolio. If you guys enjoyed this series, please let me know that by leaving a like on the video. And if you guys have any questions, comments, or concerns, leave those in the comments down below. And if you guys are thinking to yourself that these small amounts of money will never amount to anything, I want to let you know that the wife and I's portfolios started out just like this and are now worth over $300,000. If you want to check those out, you can do so right here. But until next time, see ya.